is a potential breakdown setup for DWAC, Digital World Acquisition Corporation, a special purpose acquisition company, which really is a blank check buyout company. Here off the daily interval, each kind of representing a day, we put in this beautiful divergent high with this rising bearish wedge pattern, snapped it, put in the sell signal, coinciding with that 50-day moving average. We had negative and or bearish divergences really constructed on all three indicators with both crossover on MACD and oscillator, snapped the 50-day moving average, had a slight back test, and never looked back. Huge downtrend moment since. And here we are, stepping lower. We have the secondary primary downtrend line here off the April reactionary highs, multiple reactionaries to help confirm that. And we are reacting right off that 50-day moving average. Call it a triple line of resistance, call it 33.43 price resistance, coinciding with the secondary primary uptrend line and the 50-day moving average. So we have a ton of resistance up above. Now, if you're bullish on DWAC, you're bullish on this special acquisition company, you think this is going to be a big buyout company with the blank check ready to be signed on a ballpoint pen, this is your time to shine. Right here, bull traders, dip buyers, they want to step in right here, right now. Set some stops below that 4-hour interval, 236 pips retracement, maybe a 6.5, 7% stop loss for that first target. 33.43 price resistance for 11% gains, 37.11 for 22% gains, 41.90 price resistance for 41% in gains. As far as the bearish case scenario, you want to see this, you want to see that level go, and you want to see a momentum fueled overshoot on a false breakout. This was a breakout, not the most well-defined breakout. It definitely got rejection right at its 50-day moving average for really an entire week here now. And again, it just gives me a bearish tone with that bearish price action rhythm. And again, time would be to scale in on a solid break below that 236 pips retracement on the 4-hour interval that I'm about to get into now, which would potentially result in a 26.66 for a 7% drop down on a backfill of the gap, 24.52 price resistance, T2 for 14% drop down to 21.98 for a 24% crash. And if we undercut those previous lows off that divergent low, I truly believe that it'll be an epic looking crash on a massive backfill of the gap there for a 55% crash. So the risk reward ratio, in my opinion, is skewed to the downside. And we'll zoom in here on the 4-hour interval, 240 minutes, each kind of representing 4 hours here. We have this hidden primary downtrend line here with negative and bearish divergences that have continued to construct here on all three indicators with both crossovers there on the MACD and oscillator and on a retest of the zero line. So I truly believe a solid break below this 236 fibs retracement, call it 29.74 price support here on a solid daily candle close will enact a sell signal, in my opinion, and stair step lower there to that first target, 26.67, which coincides with the daily interval for an 8% drop, 24.52 for a 16% crash, down to a revisit of the undercut of those lows there, 22.50, 0 fibs retracement there for a 24% crash. So we'll see what happens. Anything's possible. Again, like I like to say, but the evidence is starting to build and construct to the downside for a big move. So we'll see what happens. Keep you updated to see any more significance on the charts.